So we are at a very unique area in regards to Tesla stock, both from the perspective of a technical standpoint, but also from a fundamental standpoint. As you guys know, we do have earnings for Tesla being released on Wednesday, and we're going to go ahead and touch on some aspects both from a technical standpoint and also a fundamental standpoint. Now, one thing I do want to point out that I'm a bit concerned of in regards to the fundamental aspects from Tesla is, of course, these price cuts. Now, this has been something that has been vocalized by many individuals, including Gary Black, who's a Tesla bull and fund manager that definitely has a lot of Tesla in his portfolio, saying that Tesla should stop cutting as much as it is and actually start advertising more. Now, of course, there is a little bit of a divide between individuals who believe that Tesla should be advertising more or actually cutting more. But I want to show you guys this chart over here, and it's pretty concerning because when we look at vehicles like the Model 3, for this last quarter, recently, we had price cuts on October 4th, but they were very minuscule, right? They were very small, from 53,000 for the Plaid all the way down to 50,000, etc. The cuts on the Model 3 haven't been as bad so far, but also recently, when we take a look at the Model Y, they also have been very minuscule since the last quarter. But when we take a look at vehicles like the Model X, right, it tends to be this huge delta between what the price you can buy the Plaid now for versus what it used to be. I mean, back then, imagine paying 138,000, almost 139,000, and then just halfway into the year, you could basically buy the same car for 90,000, right? It also has a similar pattern when you take a look at the S, right? So the X and the S are the vehicles that have had significant price drops. Now, granted, one thing that we know from the last delivery numbers is that when we pay attention, we know that the Model S and the X tend to have a minuscule amount of deliveries for Tesla. We know that the Model 3 and the Model Y make up the bulk of deliveries, but still, the main concern is profit margins may actually still be an issue for this quarter. Now, I'm very optimistic, for Tesla from a fundamental standpoint for Q4, but I'm not that optimistic about Q4 from an economic standpoint. And so there's a couple of things we're going to want to touch on, both from an economic standpoint, a fundamental standpoint, as well as just a technical standpoint. So a lot to cover in today's video. Now, let's go ahead and take a look at Tesla from a technical standpoint, right? So we see that Tesla recently rallied up a bit in October, and this is what I was talking about how historically we see somewhat of a relief rally for October historically. Not saying that always has to happen, but that's typically what happens when we look at previous years, and that's exactly what we got. But recently we've had a lot of selling pressure going on, and this is a combination of a couple of topics, right? We have a lot of geopolitical tensions going on, and the fear is of them actually escalating. And then of course we had issues with the bond market just a couple of days ago. And so Tesla's right here at this area from a technical standpoint where there's a lot of volume relative to price. And so when there's a lot of volume relative to price, there's a lot of trading between buyers and sellers, and so that means that you could have areas of supports and resistances or consolidation, which is why last time when we were around these areas, we saw Tesla go up, down, up, down, up, down, up, down, until it had that catalyst event that pushed it forward. The catalyst event that's going to push Tesla forward in the next couple of days is going to be its earnings. And again, I'm not that optimistic for Q3. Now, I do want to put it out there that yes, I am still long-term bullish on Tesla. I've been investing in Tesla since 2017. And just because I'm not optimistic for Q3 doesn't mean, I'm saying sell all your shares for Tesla. Absolutely not, right? You always have to do whatever you find or see value in and do your own due diligence. I don't plan on selling anything in my long-term portfolio for Tesla. In fact, I'm just waiting for another opportunity to buy in because I think that going into 2025 and 2030, that's when things are really going to pick up with Tesla, especially because right now we're not in the best macroeconomic environment. And so that's what's really hurting Tesla, because why is Tesla having to cut its prices? Well, it is kind of good that it hurts the other legacy automakers because Tesla does have that pricing power, but it also does hurt the profit margins for Tesla. And obviously they're doing this to stir up demand, because when we have an environment where interest rates are 8%, even with stellar credit, it's very difficult to finance a new vehicle, even for someone who is in a good position. So imagine individuals who are in worse positions, in regards to their credit. And so that's why right now, economically, things are not good with Tesla. Now, going back to the price action, we're seeing Tesla kind of break below this area over here. And so if we don't see the buyers step in as we get to these lower areas where there's less volume relative to price, that's just going to be concerning. In fact, you guys see this white line over here. I have it labeled as a support because we see this wick over here where we saw the buyers actually step in, and that's what kind of propped us up for October. And if you actually zoom out to a weekly time frame, you'll see that this is a very prominent area of support. It's been a resistance in the past, and so definitely something that we want to pay attention to. Is Tesla gonna fall down and bounce above this area as we get to these lower levels of volume relative to price, or is it going to fall down even lower? If it falls down even lower, that could be a bit concerning for Tesla. Now, going into the topic of geopolitical issues and events and tension, one thing that I do want to share with you guys is this chart, because historically speaking, right, of course, historical price action is not indicative of future performance. That's something that we have to understand, but historically speaking, it's very common for the markets to panic when a new event unfolds. In fact, the average historically is that the market falls down 0.6%. And so, of course, we're going to see the market, especially as these tensions actually just came up recently, cause some pain. And that's exactly what we saw with Tesla stock. That's exactly what we saw with the NASDAQ, with the S&P 500. It's no different from any previous time. But one thing that we kind of have to understand is that as these geopolitical events kind of unfold and prolong and continue, the markets tend to kind of ignore them eventually. And I know it sounds bad. War is terrible. Of course, nobody wants that. But eventually, the market stops kind of looking at geopolitical tensions as that hype starts to die down, and it starts to revert back to fundamentals and, of course, other factors like interest rates, and kind of just reverting back to what the market typically cares about, looking at the actual economic environment. And so on average, 1 year later after geopolitical tension arises, we actually see the markets push up. We're over here in the beginning right now with this crisis in Israel, right? And so, of course, one thing we have to understand is that this isn't always going to be the case. In fact, if you take a look at 9/11, that wasn't the case at all, right? 9/11, we actually ended a year differently by down 20%. But that was just an exception. But of course, every single unique geopolitical issue is going to be different, especially in the time period. You have to understand where we're at currently with monetary policy. I mean, there's several different aspects to really consider. You can't just blindly look at this chart and assume that things are going to get better. But what I'm trying to say is that generally speaking, we see things get better, and right now we're in the midst of chaos. Things are starting, and of course it's very normal for stocks to kind of pull back. This is why the other day I talked about looking into GDX with the Push and Profit Private Group, because this is a gold miner, by the way. What we tend to see is that gold, right, these commodities such as gold, silver, they tend to push upwards in times of geopolitical tension, simply because it's seen as a safe haven, as an asset of safe haven. And so that's where we see capital kind of flow to. And so definitely a great trade that we had within the Push and Profit Private Group. But again, going back to Tesla, I do want to touch on a few different topics as well. So, of course, we have the earnings in regards to Tesla, but we also have a week that's going to be a little bit interesting. And the reason why, not only is it going to be interesting just because of the earnings, but we have a bunch of Fed speakers speaking, right? It's littered with scheduled events for Fed members to speak. And typically when they speak, they have a huge sway on the markets. And so this is going to be a very volatile week. I'm not going to lie. We have a lot of mega cap stocks reporting. So it's not only Tesla. We also have Netflix. We also have some financial institutions reporting on Monday and Tuesday. But look, we have Philadelphia Fed President Patrick Harker speaking. Then on Tuesday, we have Fed Governor Michael Bowman. Then, of course, we have Richmond Fed President Tom Barkin. Then we have the biggest hawk of them all, Khashoggi. Every time Khashoggi talks, it's almost like the market just falls down immediately, because he's the one saying, hey, we need to actually hike even further. He's the biggest hawk in regards to all the members in the FOMC. So we have him speaking. Then, of course, on Wednesday, we even have more Fed speakers. We have Lisa Cook. We have John Williams from New York. We have Chris Waller. I mean, it's going to be a week where we're going to have a lot of ups and downs, specifically speaking, because we know that based on previous Fed minutes transcripts that we've seen, there's some dissent within the Federal Reserve or the FOMC. We know based on the dot plot that there's a lot of individuals who believe we should hike even further, and then a lot of them saying, hey, we probably should just worry about how long we should hold it, right? We have Chicago, Austin Gusby. He's honestly the biggest dove. He's the one saying, hey, we should probably, he's just the one that every time he speaks, things kind of pick up. It's very optimistic, right? And so, one thing that we do know is that recently in the Fed minutes that we just got last week, I believe, we did hear that there are concerns of over tightening and actually breaking something in an economy. And so that's going to be interesting. So, of course, we have Tesla's earnings, we have a lot of Fed speakers speaking. But, of course, on Thursday, we also have the U.S. leading economic indicator, right? Or the index. And so this is going to be something that's possibly going to continue shaping the direction for the markets because, especially for Tesla, because if we have a bad Tesla earnings and then bad forward guidance, right? That's something else we want to talk about, the forward guidance. But then the leading economic index, which has pretty much capitulated for the last 17 months consecutively, if this indicator continues to show that things are not looking well, and of course in previous videos I dissected how this index is actually made up and what actually makes up the moving parts for this index, but essentially it's a leading indicator on it, kind of looking at several different sections of the economy. And when it goes down, historically speaking, it's kind of an indication that we're going into a recession. And so unless we don't see any positive updates with this, we could have a bloody Thursday, okay? And so that's something we want to absolutely be aware of. Now, when we take a look at the 10-year Treasury, we are kind of seeing some relief. It looks like we hit our peaks in just from the last week or so, but I honestly wouldn't say that things are still looking that great for the 10-year Treasury. I believe that we may actually see things actually push up even further. So we'll definitely want to continue monitoring this. But one of the reasons why I say you want to pay attention to the 10-year Treasury is because, again, when the 10-year Treasury is at these levels that we haven't seen since 2007, at these high levels, it almost takes away the appetite to invest in risky assets like stocks and just put it in government bonds and treasuries where you have this guaranteed return. I mean, that's called the risk equity premium, right? And so when you have yields this high and the market already rallied in the beginning of 2023 a significant amount, we're seeing a lot of fund managers kind of look away and say, oh, maybe it's time to roll out of the market and enter into these 10-year treasuries and end the year like that, especially as we know things, as I've been saying, honestly, it's not as we know, but as I've been saying, I think going into 2024, the first half of 2024, that's where the real pain is actually going to begin. Because one of the things we've heard the Fed members say, and something I've been pretty much preaching about, is that it takes time for the impacts of monetary policy to actually bleed into the economy. And so currently speaking, we still haven't felt the true pain of previous rate hikes. We've paused for quite some time since the middle of the summer, but the economy still hasn't felt some of the previous rate hikes. And so that's when the real pain is going to likely come in 2024 in the first half. Now, I believe that the second half of 2024, when we actually start seeing cuts on the federal funds rate, that's when things start to look more optimistic for Tesla stock and overall markets. And that's when I'm going to be pretty much looking very hard to actually find an opportunity to start averaging in my long-term position for Tesla again. And of course, I do dollar cost average equally each month for a lot of the index funds, but for stocks, individual stocks like Tesla, I like to kind of wait it out and see what's going on. Now, when we take a look at the futures markets, we see something interesting. So last week we had some pretty high or hotter than expected CPI numbers showing inflation is still somewhat of a bit of a concern. But interesting enough, we see the futures markets actually capitulating or falling down in its prediction about another hike for November 1st. And this is something I talked about, that as we got closer to November 1st, we're most likely going to be seeing this number fall even further down until eventually it's zero, as I have a strong belief that the Federal Reserve or the FOMC is not likely to hike again. And I'm saying this because when you look at the summary of economic projections, if you look at the data that the Fed puts out, which by the way you could just get at fed.org, it's all publicly out there, and you actually start to parse through what the Fed is saying, we're hearing them being a bit concerned that, hey, yeah, we're still going to monitor the situation, but the concern is we obviously don't want to hike too much because they're trying to navigate this somewhat of a soft landing. The idea of them actually achieving that soft landing, I'm not too confident in the fact that they will be able to do that, but we'll, of course, have to end up seeing. We're kind of in this silent recession, is what many are calling it, because of the idea that everything else is bad, but the thing holding everything up, it's like the economy is holding up by a string, and that string is the labor markets. We see that labor is holding up, and as long as Americans are getting their paychecks, even if they are going into debt, they're still spending. right? It's when people don't have jobs and they don't have the capability to spend. That's when the real recession takes place. But so far, jobs have been holding up. And so this is pretty good. Now, I know the feds want the labor market to cool off a bit, but if we could have the labor market hold up while inflation comes down, then we could have this, soft landing scenario that the Fed is actually hoping for. So again, we're going to want to continue paying attention to inflation, the labor data, and of course everything else going on in the world. And so bringing everything back to Tesla stock, right? Looking back at the technicals, yeah, we have some geopolitical tensions, and if anything escalates for this week, yeah, we could see more pain for Tesla. And of course, we're going to want to pay attention to the earnings. The earnings, I'm not too optimistic for Q3. We know had a lot of price cuts, profit margins. We saw what happened last time when when that took place. I talked about Tesla falling down all the way down to these low $200 levels, and I remember when I was saying that around over here, individuals thought I was crazy to think about that, right? And people just thought, well, no, it's not a big deal. Tesla's just going to bounce up and continue going forward. No, that's not what happened, right? Profit margins are a huge issue. And this is why you can't just look at technicals. You have to pay attention to the fundamentals. And the fundamentals is honestly one of the hardest parts of doing the work I do of just analyzing the markets, because many individuals are very easy or quick to learn technical analysis. It's one of the easiest types of analysis you can learn, but understanding economic data and breaking down the fundamentals is one of the most challenging. But once you are able to understand what's going on individually with the companies that you're investing in and what's going on in the economy, you tend to have more of a holistic idea. And so that's why I don't have a crystal ball, but a lot of times I hit it right on the nail. But I do want to emphasize I don't have a crystal ball. I know I'm flattered that some of you guys may think that, but at the end of the day, I don't. Now, Q4, we do know, or not know, but what we heard is that Q3 from the last earnings call, or in Q2, Elon mentioned that Q3 production numbers are going to be stifled simply because of updates and ramp ups of gigapresses in the factories. And so hopefully the idea is that Q4 we have more vehicles being produced, and that's where we see more things coming out for Tesla that seem good. But still, even if Tesla does well fundamentally, the issue is obviously economically, where even if you produce more vehicles, well, if people aren't buying, that could be the concern for 2024, right? Now, also, something that you also have to understand is that when we take a look into these earnings, it's not just the numbers that's on the earnings report. You also have to take a look into the forward guidance. There's a lot of nuance. And last time the forward guidance, as I just said, wasn't great. Elon Musk said, hey, Q3 isn't going to look good. We have to stifle production, etc. But then he also talked about the Optimus humanoid robots, and there was some disappointment there as well, as I believe they only produced about like 3 to 5 of them. And they mentioned that sourcing the products or the materials isn't honestly that easy. It's a bit more challenging. And so for the forward guidance, we want to hear an update on those humanoid Optimus bots, as Elon Musk has been very optimistic in previous calls, earnings calls, saying that this is something that he expects to make Tesla the most. I'm trying to paraphrase, but he said something along the lines as the most valuable company in the world, which is definitely very extreme, but Elon Musk can sometimes be like that. But of course, something else we're definitely going to want to hear, and that we haven't touched on so far in this video, is going to be the Cybertrucks, right? Any day now, we're getting so many clues about updates in the Cybertruck. In a previous video, I pointed out a page on X.com, how now we have an officially verified Cybertruck page. We're seeing more photos of Cybertrucks on the road. We're seeing even Tesla do live streams of their Teslas or the Cybertrucks driving through Mexico and California. And so we're getting a lot more updates on Cybertrucks. And so if we don't get any idea of a delivery in this forward guidance earnings call, that's going to be bad for Tesla, because many analysts are kind of modeling in Cybertrucks for at least Q4, right? At least to get some of that in the end of this year, and then of course the bulk of it going into 2024, because we know that lightweight trucks like pickup trucks are what many of Americans favor in regards to the type of vehicles that they purchase. In fact, I'm honestly considering just getting a pickup truck as my next vehicle. Right now I'm driving my car till the wheels fall off, but next car is, I'm considering a pickup truck for many reasons. I'm sure Americans love pickup trucks just because of the ideas that I see, right? With pickup trucks, there's opportunities to actually make more money. For example, there's many times where you drive down the road and you see appliances that are in great conditions, like fridges, stoves, dishwashers, and you wish you could just pick it up, maybe refurbish it and sell it, but you can't unless you have a truck, or let's say with couch flipping. I mean, there's several different aspects of utility in regards to pickup trucks, which is why I believe a lot of Americans actually favor that in regards to just your typical sedan. And so if we don't have an update on the Cybertrucks for Tesla's forward guidance, that's going to be bad. Okay, so again, to recap what we're looking at from a technical standpoint, we want to keep updated on geopolitical tensions. That's going to be a huge driver for Tesla. We want to pay attention to their earnings, and if Tesla has a bad earnings, bad forward guidance, geopolitical tensions, all bad, well, we want to pay attention to this level over here, because if we break down below 235, that's not going to be good news for Tesla. Again, technical analysis is not so that you could predict the markets. It's just there in place so that you could go ahead and measure what's currently going on. And of course, if it breaks below that, that's just a measurement that, oops, things are looking very bad. With that said, I do invest in Tesla in the long term, and if Tesla falls down, I'm not going to be too worried. As I said, I'm optimistic. I'll just wait for that area of confirmation to go ahead and buy in, because I don't just buy in at the dips when it comes to Tesla or individual stocks. As I said, I wait for a lot of selling pressure. I don't try to catch the falling knife. And once there's confirmation of things going upwards, that's when I'll add into my long-term portfolio. But of course, as Tesla, if it continues falling down, I'll hedge by shorting it in my trading account, because I also have a separate account where I trade as well. So definitely, hopefully we covered everything you need to know with Tesla. If you have any ideas of or what your predictions are for Tesla's earnings, let me know in the comment section below. I'd love to hear your thoughts and opinions on that. And with that said, guys, before you guys go, make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.